Hello, everybody. Welcome to our show once again. Thank you for joining us. If you have any questions, you can type them in the comment section. And if you have any comments that are relevant to what we're discussing this afternoon, you can also type them in the comment section. We're continuing with our topic, which we started 3 weeks ago, of values and money, and today we'll be concluding on the discussion, and our discussion will focus on the subject financial and money archetypes. Money archetypes help you see specific patterns, attitudes, tendencies, and beliefs that have surrounding money, so you can begin to face some of what stresses you out about it. Our discussion today will focus on the subject of financial archetypes. Regardless of our socioeconomic status, we all developed a way to relate to money, consciously or unconsciously. I was just thinking of my days in high school. My pocket money was kind of fixed. You'd know that if you get registered later, the amount of money that would be there, and you would know automatically that money was supposed to be used for the whole term. You would also get the same amount of money for the bus back home. So I just mentioned that because that's how maybe we're talking about how we're taught to relate to money. For some of us growing up, you know your pocket money. There was no tag, everyday tag. It would come beginning and end of the term, but we managed. Consider who handled the money in your home growing up and how they spend it. Did anyone ever share any money mantras with you? Like, money doesn't grow on trees. Was money about survival, or was it about pleasure? I've just mentioned that for some of us, our pocket money was not for pleasure, it was for survival. Was it used as a way to gain and assert control, or was it shared? Did you long for it, or did you have it? Do you feel joy or fear when you think about money? The 8 archetypes that we will talk about today break down how we each relate to our finances, including our behaviors, feelings, and habits around it. So discovering and working with these archetypes can have a profound impact on all areas of your life and business. When you learn to leverage the strength of archetypes, you'll be able to earn money from your natural strength, understand your unique gifts, overcome money challenges, and break repetitive cycles, design your business model, and attract ideal clients. Create the perfect draw of a unique money and personality. So maybe as we go through the show, how were you taught about money growing up, and how has it affected you? For me, as I shared, I think I was taught to work within the budget because, as I mentioned, at the boarding school, you'd know if you spent there was this $10, it was rate, and it was standard, and you'd know that your term was supposed to, you were supposed to use that $10 for the whole term. If you spend it on a day, it means for the rest of the term, you'll be depending on the boarding food. So yeah, I just thought I could share my story there about how I was taught to manage money. Themba, do you have any news from this past week for our viewers?
Yes, I do have plenty of news for our viewers, Tafa, as well. There are 4 things that I would want to talk about. Since it's Women's Month, I would want to, the first theme is on women empowerment, women financial empowerment. The second theme is on the state of South African households at the moment. And then the third theme is on financial crime. And then the fourth theme is on the state of the markets, particularly given what happened in the past week. Let's just start with the first theme, Tafadzo. Some of you may be listening from various countries, but in South Africa, yesterday was Women's Day. And so I would want to start on a note that says, Happy Women's Day to all our women listeners. Happy belated Women's Day and Happy Women's Month. So with that theme of Women's Month in mind, there are three articles that I would want to refer to. I was reading an article in the Fortune magazine in this week, and there is something that I picked up there. What that article basically said was that for the first time in history, women are on the verge of controlling the majority of personal wealth. So they are actually projecting that there will be an unprecedented transfer of wealth to women, which is projected to reach about 30 trillion in the next decade. I just found that, very, very, very interesting. So this is a global trend, by the way. We're going to see an unprecedented transfer of wealth, to women, which is projected to reach, 30 trillion in the next, decade. So that's the first article that I would want to refer to. The second article that I would want to refer to is an article that appeared in a South African magazine at the end of July. And they were basically referencing an ABSA home loan report. And they basically said that the majority of new home loan applications in the second quarter of 2024 were from first-time home buyers. And women actually bought more property than men. In other words, if you look at the first-time home buyers, women are actually the majority of the purchasers of property. In fact, that article was quite emphatic in pointing out that women are the fastest growing group of property owners in South Africa. And I have found that to be very, very interesting. Another article that I would want to reference, and this came from a company that deals with property again, called Better Bond. And they revealed that women over 55 are the fastest growing group of property owners in South Africa. That article pointed out, that women are emerging as key players in the South African property market. And, they reference quite a lot of market data. But, one of the things that they said is that in a market of over 7 million South Africans, single women own 83,000 more homes than single men, with female mostly purchasing as repeat buyers. Now, the article goes on into stating one of the reasons why, that could be the case. Why am I talking about some of these trends that are happening? I think there are three reasons why I'm talking about that. Reason number one, if you're a woman and you're listening to us today, it's very important for you to understand that there is a trend that is emerging. And that trend is that women are getting more financially empowered than before. We're talking about financial archetypes. We're talking about money beliefs. Hopefully, one of your money beliefs is not that belief that says, men are the only people who should be handling money in the household. I think things are changing. Things are changing to such an extent that we're seeing greater empowerment of women. In the next decade, I think you're going to see more women being empowered and more women becoming billionaires, because that's a trend that is emerging. The second reason why I'm mentioning this is that what we tend to find out, especially among couples, is that the man handles most of the finances. And because the man is handling most of the finances, it always happens that sometimes the man dies before the woman. And because the man is dead, the woman is actually stuck because they let the man to handle all the finances. In fact, you would know that life expectancy figures are actually showing us that women live longer than men. In South Africa, for example, the average life expectancy of a woman is about 70 years, whereas for men, it's about 64 years. So, statistically speaking, women live 6 more years than men. And in other countries, the gap is actually much wider. So, one of the reasons why we would want to talk about financial empowerment of women is that if we go by statistics and you are a married couple, it's very important that the woman gets involved in the management of finances, because you might actually find yourself having to handle the finances after the man has died. You might want to know one of the reasons why Better Bond is saying women above the age of 55 are the fastest growing demographics of home, buyers. They actually gave 3 reasons. And one of the reasons they gave is because some of these women who are buying properties and who are over 55 are actually entering the property market as a way of downsizing, especially after the husband has died. And so that's why we're seeing single women go over 55 going into the property market. It's part of downsizing. And the reason is that the man who was the breadwinner is dead. And so the woman has to find a smaller property so that they can continue with their lives. But there is a third reason why I'm mentioning, what I'm mentioning. So just to go over again, reason number one is that there is a trend where women are becoming more financially empowered than men. Reason number two, statistics are showing us that women live longer than men. But also, when we look at financial archetypes, I always, have argued, especially in a marriage relationship, that people should complement each other. And what I see most of the time is that women tend to be savers, not in all cases, but in some of the time, in most of the cases, at least in the cases using anecdotal evidence, in some of the cases that I have been involved in. And so it's very, very important that as we go on to discuss about financial archetypes, as women, we begin to complement, men, so that where men lack financial wisdom, women can actually complement in that regard. So that's the reason why I'm also mentioning that. So that was our first theme on women empowerment. In this, let's move on to our second theme. And this second theme is talking about the state of households in South Africa. It's something that we've been talking about, Tafadzwa, that households in South Africa are in deep trouble. And they are in deep trouble essentially because interest rates are at a 15-year high. This was confirmed by Nedbank in their interim results presentation in this particular week. They actually confirmed that South African households are in trouble, and there were quite a number of statistics that were shared in that results presentation. One of the statistics is that South Africans have about 2.35 trillion in debt, and a third of all credit active consumers have missed more than 3 monthly repayments. But what I also found interesting is that household debt as a percentage of disposable income has increased to something like 63.3%. What it means is that if a particular household is getting 100 rands in disposable income, 63 rands and 30 cents goes to paying debt. In other words, if you look at the state of South African households at the moment, the majority of the income is actually going to, paying debt. And in fact, some people are even getting more debt to purchase basic necessities, which is very, very sad indeed. So why am I mentioning these statistics? I'm mentioning these statistics to continue with our advisory, which we gave at the beginning of the year. And the advisory that we gave was very simple. If you get any additional income in your household, let it go towards the repayment of debt. We are in a season where we must prioritize the repayment of debt. And what we are seeing most of the time is a situation where even when people reach retirement age, they are actually deep in debt and they cannot retire. And they've had to get additional income or to postpone their retirement. So if you would want to be financially astute, if you are in a particular household, just prioritize the repayment of debt. Obviously, all indications are such that interest rates may come down, especially from September going onwards, but it's not guaranteed. But let's just reprioritize the repayment of debt. Let's move on to our third theme. Our third theme is on the increase in financial crime. I was in New York last week, and as I always do when I go into a foreign country, I always ask people there, how is the crime rate? And so we had a taxi driver who was taking us to the hotel, and I asked him the question, how is crime in New York? And his response was very, very interesting. He actually said that crime has shifted in New York from petty crime to financial and digital crime. And that's what he said. And my observation moving around America last week is that you don't really have the kind of crime that we have in Africa, where you are really afraid of people stealing money from you, stealing your wallets, or dispossessing you of your cell phones. But the crime has moved to digital crime and to financial crime. Those are the trends that we're going to see in coming months and in coming years in this part of the world. And Standard Bank in this week had a press release, and in their press release, they actually said the same thing. They actually said that statistics from the South African Banking Risk Information Center, an organization called SABRIC, is actually showing that there's an increase in digital banking and card-related fraud. In fact, in that presentation, they were talking about a concept called phishing. So phishing is where scammers will use phone calls and social engineering skills to manipulate victims into disclosing confidential information. So you might get a call from somebody who is actually saying, can you, give us your confidential information because there is a problem with your account and we want to resolve your account. So we have seen fraudsters who attempt to create panic by actually telling us that our account is at risk and urging us to move money. When you receive such phone calls, don't panic. I've heard so many people telling me of how they have been defrauded. So be careful about unsolicited, calls. Be careful about unsolicited emails, especially those kinds of emails that ask for personal information. We are just in that age, where people would want us to part with our hard-earned money. Remember, the possibility of you losing your money through the means that have happened in the past is decreasing. But what will happen is that people are going to hack into your accounts, and there is always the possibility that you may end up losing money. So let us just be vigilant there. So some of the tips that I would want us to be aware of, even if you receive a text message, it could be a WhatsApp from somebody who seems to be familiar, always confirm that message. I think the typical WhatsApp scam these days is somebody whom you know who is claiming to be in trouble and they need you to e-wallet a certain amount of money, don't e-wallet that amount of money until you have really confirmed. And we're going to see an increase in some of these, scams. Never at any stage, share your one-time PIN. Most banks generate a one-time PIN, and, don't share that one-time PIN with somebody on the phone whom you don't know. Just always remember that your bank will never ask for your digital banking credentials, including passwords, one-time PINs over the phone. We must be careful when connecting to public Wi-Fi networks. So it's something that people don't pay particular attention to, but it's something that is going to be very, very important going forward. And so to the extent to which some of these digital platforms that you use have got two-factor authentication procedures, go for that two-factor authentication procedures, because that's just the age that we are living in. There is going to be an increase in digital-related crime. And to the extent possible, for added security, always use your fingerprint or facial recognition to secure your device, or when signing into your bank app, instead of numbers, because that's where we are going to. In the world to come, authentication is going to happen through very secure means, such as fingerprints, such as facial recognition, because other authentication procedures are not as secure. And so it's something that we need to be really mindful of, particularly as everything is going to be happening digitally. Let's just move on to our fourth theme. And in this fourth theme, we're talking about what happened to stock markets in this last week. Tafadzo, I don't know if you're watching the markets globally in this particular week that we've just passed, but there is something that happened. Let me just reference three particular markets here, starting with the Japanese market. So in Japan, the Japanese Nikkei 225, which is their stock market index there, actually fell by 12% on Monday, which is huge, because that was the worst performance since 1987. If you looked at America, for example, the S&P 500, reduced by 3%, and there was destruction of value to the extent of 1.3 trillion in one day, which is the worst day since 2022. The Dow, which is another stock market index, also lost 1,000 points, and so did the Nasdaq as well. If you don't understand what I'm talking about, just know that stock markets, including the JSE in South Africa, reduced significantly. Why are we talking about the stock markets? I'm talking about the stock markets because it has always been our advice that we need to gain financial education to such an extent that we can supplement our pension funds by investing for ourselves, on the stock market. So we always advise people, get financial education. Start by managing a portfolio for yourself on the stock market and diversify that portfolio, and then gain more financial education and invest in alternative investments, and so forth and so forth. But the reason why I'm talking about this is that when we look at what is happening in stock markets, particularly in America, remember, there are two emotions that we must always be mindful of, particularly when it comes to investing. The one emotion is the emotion of fear. Never be fearful when it comes to investment. The other emotion is the emotion of greed. Never be greedy. So people that are fearful and people that are greedy never do well as investors. What we are seeing in markets at the moment is that extreme fear is driving the markets, particularly the US markets. If you have been following news reports in the past week, people have been talking about a possible recession in America, for so many reasons. People are worried about what may happen to stock markets, especially as we lead to the elections. People have also been worried about certain things. There was a significant event that happened. One of my favorite people in the whole world, his name is Warren Buffett. I talk about Warren Buffett quite a lot. He actually reduced his investment holding in Apple. He cut that investment holding in half. And that triggered quite some discussion in the market, and people became fearful and started to panic, asking themselves questions such as, why is Warren Buffett reducing? In fact, if you follow Warren Buffett's investment strategy, you realize that Warren Buffett is sitting on a lot of cash at the moment. Lots of cash. He's not investing. He's actually cutting his investments in companies, and he's sitting on quite a lot of cash. And one of the reasons why people also started panicking is because there was a dismal labor report in America showing that the economy has created less jobs than in the past. Here is my advice. If you are invested on the stock market, this is not the time to panic, right? Markets will go through periods of uncertainty, and we are living in that time where there will be lots of volatility. And some of the volatility will come from the fact that wars are being fought in the world. For example, Russia is fighting Ukraine, there is a war in Gaza, and who knows, in the next months or weeks, Iran may retaliate and fight against Israel. That's a possibility. It does not necessarily mean that if stock markets go down, you then take your investments from the stock market. Don't panic. Never panic. What you need to do is always to operate with a diversified market portfolio. Your greatest defense against uncertainty is to diversify your portfolio as much as possible and not to be fearful. In fact, when stock markets tank like they have tanked in this particular week, that is actually the time to buy. Why? Because shares are cheap. Because shares also go on sale. And when markets go down, it actually means that shares are on sale. So before we move on to the next thing, here is how I would want to simplify what I have said. Number one, get financial education. Have a portfolio that you invest in, become an investor. Before you become an investor, we have outlined what the journey looks like. You become a saver first, then you become an investor. You are not going to be fabulously wealthy just by saving, but saving is a habit that you need to develop over time. Secondly, when you begin to save, just know that markets go through turbulence at times. It's something that is uncontrollable. It's something that happens sometimes when we are least expecting it to happen, like it did in the past week. In fact, there is something that I didn't explain, and I don't want to go into that detail. You might have heard people talking about the carry trade, the Japanese carry trade, because for the longest of time, interest rates have been near zero in Japan. So what was happening globally is that people would borrow money in Japan because money was cheap, and they would then invest that money in jurisdictions where the interest rate was higher. That kind of movement of money is something that is called the carry trade in the financial sector. It's called the Japanese yen carry trade. So what essentially happened in this last week is that in Japan, they actually increased interest rates, right? So that correction of interest rates in Japan resulted in a number of people who were involved in this Japan yen carry trade unwinding their position. And when they began unwinding their positions, it caused a distortion in share prices. But the long and short of it is that these distortions, these movements in stock markets will always happen. But for somebody who is schooled in financial education, you should not be fearful. So be mindful of fear. As markets are tanking, like we saw at the beginning of this year, as this week, as markets tank, so lies opportunity. And it's not the last time that it's going to happen. We are living in periods of great uncertainty, arising from geopolitical conflicts, arising from, distortions in economies. But don't be fearful. Investors should never be fearful. Don't disinvest your money from the stock market because the prices have plunged. It's actually an opportunity for you to buy more shares because shares do go on sale. But your greatest defense against all of those things, as you construct your portfolios, your greatest defense is building a diversified portfolio. Tafazo, I have said quite a lot in my update. Let me hand over to you.
Thank you very much for that comprehensive update. Our book of the week is not about the money, a financial game plan for staying safe, sane, and calm in any economy by Brent Castle, a top financial advisor in the United States. What are some of the lessons that you've learned from this book?
Tafazo, I have spent quite a lot of time giving an update of the markets, and I would want to go into the financial archetypes. So I will not talk about some of the lessons that I have learned from this book, but there is a story that I want to narrate, Tafazo, if you will allow me, from my journey to New York in the past 2 weeks. I went to America and I ended up in New York. I enjoyed my time in New York. But let me just narrate a story which may illustrate what this book is all about. So when I was in New York, I decided with my son to go to an island which is close to New York. I think the name of the island is called Staten Island. So there are two ways of going to this island. It's either you pay to go on a ferry. When you do that, the ferries that go there are typically smaller ferries. It's faster. Those kind of ferries get close to the Statue of Liberty so you can get a good look of the Statue of Liberty and get great photos of the Statue of Liberty. And then the easiest way of getting to this island is getting on a free ferry. You don't pay anything. This ferry is free. It also passes through the Statue of Liberty, but you will not necessarily go, get a very good, picture of the Statue of Liberty. So I just said to my son, let's get on the free ferry. We just wanted to experience, not that we didn't have the money, but we just decided to go on the free ferry. So we went to this place, and the one thing that I noticed when we got there is that there was a large volume of people. There were many people waiting to get onto this free ferry, which was not a surprise to me because nobody was paying for the ferry. So you would expect that most people would be on the free ferry. But there is one thing that happened to me. When I saw all these people, I said to myself, then, Themba, Themba is the name of my son. Themba, we need to make sure that we get to the front because I don't think the ferry will accommodate all of us. Some of the people, because of the numbers, are obviously going to be left. So we were squeezing our way through the crowd to make sure that we find ourselves at the front of the queue. And what I noticed is that people just watched us, just squeezing our way through, because in my mind, all these people would not fit into the ferry. In fact, we actually got into a conversation with these boys, and I did say to them, look, I don't think the ferry, because I hadn't seen the ferry that was coming, I don't think the ferry that is coming will accommodate all these people. So we were making our way and frantically pushing our way, and the people just watched us. They just laughed. In fact, the boys that I said that comment to, they didn't respond to me. I later on, saw these two boys in the ferry, and they just looked at me. Then they opened the doors for people to get into the ferry. And my goodness, this was a very big ferry. In fact, what ended up happening, Tafadzwa, is that all the people, they were about close to, let's just say close to 700 people. All the 700 people did not even fill half of the ferry. There were a number of empty seats. In fact, the lower deck of the ferry, because this ferry had about 3 decks, the lower deck of the ferry was almost empty. And I was actually surprised. And I began to reflect on that experience. Why did I think that people would not fit into the ferry? Remember, I'm coming from Africa, where if something is for free and people are queuing for a free thing, it's not going to be enough for everyone. So I've got a scarcity mentality. I don't have an abundance mentality. One thing that you learn about New York and about America in general is that everything is big in America. That's one revelation that you will have as you step onto America. Even the cars that they drive big cars, and those cars move fast. They don't have a fuel problem in America. Sometimes in Africa, we drive slowly because we want to save fuel. That's not them. The cars that they drive, they are big. And even the buildings in New York, they are skyscrapers and they are tall buildings. And when I reflected on this, I began to understand that sometimes where you are coming from and the experience that you have had in your life will actually dictate how you behave in a particular situation. The Americans were not frantically trying to get to the front of the queue, because they have got, they have got this mentality that says if the ferry is coming, it's going to be a big ferry, and we are all going to fit in the ferry. And that's what this book is about, Tafadzo. The book is titled, It's Not About the Money. It's about the beliefs and the values that you have about money. If you've got a scarcity mentality, you will actually see that your money decisions will tend to be those decisions where you are panicking because you think the world is scarce of money. Especially if you've been brought in a household where money is not enough and parents were telling you that money does not grow in trees, your outlook about money is an outlook of scarcity. And the way you approach in money decisions, you're always coming from a scarcity mentality. And those kind of people do not thrive and do not create wealth. So that's why we're talking about values. And, when we try to understand our financial archetypes, we're trying to say, what are some of the beliefs through our upbringing that have shaped how we believe about money. So in this book, the author of this book, Brent Kessel, he recounts how money stories, how experiences of his youth have unconsciously affected his financial decision making. Think of Themba trying to get onto the ferry. He's frantically pushing everyone because he comes from a country where probably the boats and the ships that I have seen, they are small. And what we need to realize is that we live in a world of abundance. And so we cannot base our financial decisions from insecurities that from our past. Rather, we need to base them from the security of knowing, who we are today. And that's what this book is all about. And I hope my story about the ferry to America actually helps us. There are certain unconscious, deep-seated thoughts, feelings, and behaviors, that we have. And we've never really taken time to question where these beliefs about money come from. They come from our experiences from our youth and how people, told us about money. But if you grew up in a different environment, your outlook about money and the way you see money is totally different. At the end, I will come back and tell you about my reflections. But that's our book of the week, Tafazo.
Before we started the show, I was just listening to an interview of Donald Trump. And what just struck me about that interview was he would use terms like, my building is the tallest building in the world. My business is the most profitable business in the world. My book is the most read book in the world. And the interview was like, so I just thought about the mindset issue that when it comes to Donald Trump's world, everything is biggest, most, largest, and he faces it in the world, not in his world, but in the whole world, even some places which he has not been to. So
just to interject, Tafazo, just to interject, when I was in New York, we ended up visiting the Trump Towers. In Chicago, we also visited the Trump Towers. His building in Chicago is the second tallest building in Chicago, actually. And his Trump Towers is actually, very, very big. At the end of my trip from America, I actually reflected on two things. Number one, it became clear to me that we live in a world of opportunity. It's in this world, there are lots of opportunities to do things from a global scale. I was encouraged walking through America and traveling through America. I was very encouraged in terms of how I can scale up my business and build scale. Because sometimes what we struggle with, Tafazo, as entrepreneurs is because we've been born in an environment where everything is small, we are not actually challenged to grow and become big. I actually vowed to myself that I would rather be a small fish in a very big pond. The world out there is very, very big. The other thing that I was really challenged when I went there is, how sometimes fast-paced the world sometimes is. New York is a very fast-paced environment. Things happen at the speed of lightning there. So I was also encouraged to pick up speed in everything that I do there. I need to point out to you, Tafazo, I've been to Dubai. And one thing that struck to me as I traveled through New York is how people in building Dubai actually copied New York. If you've been to Dubai, if you go to Dubai, that's where the tallest building is at the moment. The Burj Khalifa. It's the same mentality that those people in Dubai have. If you go to Dubai was a desert, some decades ago. Why did people suddenly have this vision of building tall buildings in Dubai and building artificial environments of rivers? They were copying New York. And it's quite clear when you go to Dubai that they were copying, New York. And they were inspired by what they saw. And so here are three lessons that I would want us to learn. Lesson number one, travel itself is a form of education. So, just learn to travel. You will be educated. Number two, inspiration is very, very important in our journey. especially being inspired by the crowd that you travel with. I've had to dissociate myself from certain people who want me to think small about what I can do and what I can end up doing. But the other thing that I also learned is that we need to market ourselves. In New York, they do quite a lot of marketing. I saw quite a number of tourists. And sometimes you get to a feature and you're saying, what's unique about that feature? But it's because they've marketed that thing to such an extent that people are so interested in visiting and seeing what is there. Sometimes you go to Wall Street, it might look like an ordinary street, but the way that they have marketed it, nobody knows how to market something like, except the Americans. I think they have learned and mastered the art of marketing. So sometimes you need to market yourself and to make yourself visible, whether at an individual level or even as an entrepreneur. And those are just things that I learned, Tafazo. I know we're digressing, but let's get to the gist of what we're supposed to talk about today.
And our next question was, can you give examples of some financial archetypes? I want to know, is it possible to change your money values over time? But I'm thinking from your New York experience, I think people can change. I think we have got an answer. If one is an entrepreneur, how do money archetypes affect their business?
All right, so let me tackle all those questions in the next few minutes that remain. Is it possible to change your money values over time? Yes, it's very, very important. I encourage all of us to take a financial archetype quiz for two reasons. It's very important to know the dominant beliefs that you have about money. So that's your as is at the moment. But we always aspire to go somewhere. So the reason why you need to take that quiz and to understand your financial archetype is so that you may know where you are at the moment and what are some of the limiting beliefs that you have about money. So that you can determine what are some of the changes that you need to put in place in your subconscious mind, especially as far as finances are concerned. We've spoken about one limiting belief. So one limiting belief that we have about money is that money is scarce. Money does not grow on trees. It's not true, beloveds. There is plenty of money out there. We live in an abundant world. We live in a world of opportunity. Another limiting belief is there are no more opportunities. There are lots of opportunities out there. So we all have limiting beliefs. So you can change your money values. It's something that will take time for you to do. You need to do things like travel. You need to do things like reading books. You need to do things like programming your mind through listening to tapes and getting educated. It's something that you need to do. Just as we go to the gym to have the right body, you will need to go into sort of a financial gym where your mind is sharpened to think differently about money so that you've got the right money beliefs, right? We don't have to spend all the money. Once you get money, you don't have to spend it. You have to grow assets. In this world, wealth is not about spending. Don't be a spender. Be somebody who is interested in acquiring assets. So I've answered your first questions, Tafazo. Do money values change over time? Yes, they do change over time. You need to get money values that will allow you to accumulate wealth. And we spoke about some of those money values last week. Your other question was, what are some of the financial archetypes that are there? But before I get to that question, Tafazo, I'm one person who is able to, I'm transparent, so I share with people some of my experiences as well. When I went into business, Tafazo, Obviously, I'm a very competent business person, very competent consultant. But one of the things that I struggled with was charging high fees because I never really thought that I deserved, those fees. So when I started as a consultant, where other consultants will be charging something like 50,000 a day, to me that was too much. So I would be humble. I would be the humble person who would just charge clients 2,000 a day, 2,000 rands. The reason why I'm saying this is that we need to realize that our money beliefs also influence how we charge customers. Have you ever met somebody who is selling an inferior product, but who will charge an arm and a leg for their product? It's because of their perception of value that they deliver to the market. If you don't have the right financial beliefs and the right values, you will always undervalue yourself in the market. And as a result, yeah, and that's what sometimes I think about people that come particularly from Africa when it comes to negotiations. Sometimes we undersell ourselves and we undervalue ourselves, and therefore we do not get the value that we deserve. For example, let me ask you the question, Tafadzo. If you go to some of this developed world, you will never see gold mines, you will never see some of the resources that we have in Africa. Why is it that when these people come to Africa, we receive very little for our gold, very little for our miracle, for our minerals? But when they take those minerals and they add value and they sell them back to us, they will charge 10 times the price. And sometimes we are willing to pay. It's because sometimes we have not learned to value ourselves and to value what we have. And that comes from money beliefs and what we believe about the value that we bring to the table. You will never get a lot of money and be wealthy if you undervalue your contribution in the market. It all comes from how you were wired concerning the value. And that's why, and I know I'm digressing here because it's a big subject, Tafadzo. We need to decolonize some of our financial systems and decolonize some of the thinking. Because when we talk about money values, and when we talk about a slave mentality, and when we talk about a colonial mindset, these were things that were embedded in us over a long period of time, to some an extent that we have taken the position of a slave, and we have never taken the position of wealth creators, of people that can significantly add value. But we need to ask ourselves and to question ourselves, where do our beliefs about money come from? And I know, I don't have time, but if you believe that you are cursed and that there are generational curses and that are following it, it's those kind of beliefs that will limit you when it comes to wealth accumulation, because there is always somebody who is fighting for you not to live in abundance. And what I see about certain race groups and certain people is that they don't have to contend with such beliefs. But because we've grown in environments where these beliefs have been wired into us, those are things that we are contending with. Then, Tafadzo, today we are talking about financial archetypes. These financial archetypes are behaviors, these are traits that we have that we need to be mindful of. Before we even handle money, we need to understand our financial archetypes. And the archetypes that I'm going to present to you are archetypes that have been presented by Brent Kessel, the writer of the book that I referenced. He talks about 8 financial archetypes. So the first financial archetype that he talks about is the caretaker. I will explain the caretaker later on. The second archetype that he talks about is the innocent person. Then the third archetype is the empire builder. The fourth archetype is the pleasure seeker. somebody who seeks pleasure. The fifth archetype is the guardian. The sixth archetype is the saver, the person who is saving money. The seventh archetype is the idealist, right? An idealist, somebody who lives in an ideal world. And then the eighth archetype is the star, right? So it's very important that you sort of see what is your dominant, archetype. Let's start with the caretaker. So the caretaker is the person who gives and invests money to express compassion and generosity. Their emotions are likely stirred when they see or when they read about suffering. These are the people who are more likely than most to make charitable contributions to help family and friends. So their positive characteristic is that they are generous, they are compassionate, but they've got painful emotional states, of helplessness, of guilt, of martyrdom, anger, sometimes. So Tafazo, sometimes I say to people, can you build your emergency fund? If you're a caretaker, you are the kind of person who, when your friend comes to borrow money, and you've got this emergency fund, you'll feel sorry for them and you'll give them all the money that you had designated for your emergency fund. And you're always trying to help people. These are the people that will complain and say they are not paying me back what they owe me. They tend to give money to people. Those kinds of people sometimes never build wealth. They are caretakers. Then there is the innocent. As an innocent, you are optimistic, you are trusting, you are passionate, you are hopeful, you are adaptable, you enjoy building networks, trusting others with relative ease. But you've got certain things that you avoid, right? So if you ask yourself, you are not paying close attention to certain warning signs, you've got lack of detail. You keep yourself from seeing important things. So the positive characteristics of the innocent person is that they are trusting. They are very simple. They are optimistic. So I spoke about financial fraud today. If you phone an innocent person and say your account is about to be hacked, these are the people that will disclose their OTPs to them. So that's an innocent person. Then there is the empire builder. As an empire builder, you thrive on hard work and innovation to create something with enduring impact. Obviously, you can be somebody who can be grandiose, who can be dominating, but you exhibit a great capacity for hard work, for focus, for innovation and decisiveness. So their positive characteristics is that these are leaders in society. They have gotten outside. They want to achieve quite a lot of financial and social impact. But obviously, the downside of being an empire builder is you tend to be lonely. Sometimes you are a workaholic. Sometimes you feel insecure. Then there is the pleasure seeker. This is the person who prioritizes pleasure and enjoyment in the here and the now. These are the people that cannot delay gratification. So when they get money, they buy branded clothes. These are the people that want to attend the big parties. So, while your pitfall is that your desire or impulsiveness can at times get the best of you, you tend to enjoy life. So their admirable quality is that these are people who enjoy life. They are socialites. So those people who are socialites will fit into this category of the pleasure seeker. They know how to enjoy the fine things of life. Then you've got the guardian, right? The guardian is somebody who is careful, who is alert, who is prudent. Safety is their highest priority. So these are the people that will invest money into a bank account. The only problem is that they are not going to take risk because they have, I spoke about extreme fear that the markets are being, if you look at the market, extreme fear is guiding the market at the moment. Guardians are susceptible to extreme fear. So these are people who suffer from anxiety, from worry, and from fear. So sometimes guardians never really save money. Then you've got the saver. So, as a saver, self-sufficiency is your highest priority, which is very admirable. So you seek security and sufficiency by accumulating and protecting your financial assets. So you can be very frugal. Sometimes you end up hoarding and even obsessive about money. So the risk about being a saver is that unconsciously you tend to believe that money can truly provide some kind of ultimate security, which is not always the case. Then you've got the idealist, right? This is the person who intends to help solve society's big problems. These are people, the idealist is somebody who is worried about society, the big, when we talk about the environment, these are the people that are worried about the environment. Or these are the people that would drive electric vehicles because they don't want to pollute the environment, because they are all about environmental and social transformation. These are the people who are worried about equality and so forth. And these people tend to be angry most of the time because sometimes, there will always be inequalities in society. Sometimes society does not behave in an ideal manner. Then you've got the last archetype is the star. So the star is somebody who leads by example, whether they are heading a movement or a company. These are early adopters or investors. These are people who've got an above average relationship to social media. So these are people that start a movement. Think of people like Elon Musk. Would be a star. He's got a movement that is trying to lead. But in terms of the downside of being a star, these are people who are sensitive to criticism. Sometimes they've got feelings of, irrelevance. So those are the financial archetypes that he talks about. So what it is that the way you handle money is determined by your beliefs about money and by your dominant archetypes. So you need to understand where you are at the moment and where you would want to go and what you need to do. Every archetype has got its own positives and negatives. So you might need somebody to balance your characteristics that you have. But, not these three things that we are saying there. Number one, the way you handle money is a function of your deep-seated beliefs about money. When markets behave differently, you will always behave the way that you have been wired. So that's the first thing that we've been trying to communicate. And therefore, it's very important to understand your dominant financial archetypes. The second thing that we've tried to communicate is that it's possible to change your financial archetypes over time. But also there is a third thing that we've been trying to communicate today. There are certain financial archetypes that are inconsistent with wealth accumulation. Don't try to accumulate wealth when your dominant financial archetype is inconsistent with wealth accumulation. For example, if you are a pleasure seeker, right? Pleasure seeker are people who are the life of the party, they socialize. those people never accumulate wealth, right? It's just that simple. If you are the guardian, you are a guardian where safety is your highest priority. Probably as you were growing up, your father went into a deal. Have you ever met somebody who says the stock market is like gambling? I will never gamble on the stock market, because in your childhood, you learned about a story where your uncle tried to do a deal, an entrepreneurial deal, and he lost everything that he had. And as you grew with your miserable uncle. And so you vowed to yourself that I will never do business because people in this world cheat. And therefore, whatever comes in your hands, you try to be a guardian. You want to protect it. You will never risk anything to do anything. Guardians never build wealth, right? And so if your dominant archetype is a guardian, we're not saying there is anything wrong with that. We're basically saying be aware of it, right? When it comes to wealth accumulation, there are certain archetypes that are consistent with wealth accumulation. In that third point, we are saying something which is very, very important. When it comes to budgeting and dealing with money, always live a life that is consistent with your money values. Let there be no discrepancy between how you handle money and your money values are. If I were you, and if I was an entrepreneur and I'm starting a business, one of the things that I would start with is I would start by defining my values. What are my values? Even when I try to handle money at a personal level, I would try by defining my values. For example, in business, one of my values is I never cheat, I never steal from anyone. I will never kill or steal to gain money. That's just not me. It's a value that informs everything that I do. I always try to be fair. When I pay my employees, I'm fair. I would want everyone to succeed. That's one of my guiding values. I believe in capitalism, but the kind of capitalism that I believe in is a capitalism that is fair and that is equitable, to everyone. One of my money values is I believe that God gives us the power to get wealth as part of a process of confirming his covenant with us. And therefore, I always set aside an amount, which I call a tithe, when I generate profit in the business. It's part of my values. It's how I do things. It informs how I handle money. Even if I do not have enough money, that is a value. And so all we are saying is before you go about investing money, saving, understand your financial archetypes. And given your goals and where you would want to go, ask yourself, what are the archetypes, the beliefs that are consistent with the direction where I'm going? And always be true to your values. Values are very important in everything that we do. Tafadzwa, we've run a little bit, but if anybody wants to get hold of me, the easiest way to get hold of me is via LinkedIn. Just type in Themba Mazibuko on LinkedIn. It's been an incredible privilege talking to you about money and values. It's not about the money. It's about what you believe about money and what the dominant archetypes, are in your life. Over to you, Tafadzi.
Thank you very much. It looks like it's a very broad topic. I'm not sure whether the question on entrepreneur, like how do money archetypes affect your business, you tackled it. If not, maybe we can take it up for the next presentation where you can discuss, because it's quite a broad topic. I managed to do my archetypes on the website. For those who want to do the website, to go on the website, it's www.abacuswealth.com. I managed to do mine, and My top 3 archetypes, just to encourage somebody. The empire builder. I'm not sure about the anchor part, but I like the positive side of empire building. The caretaker and the saver. So I hope you go to the website and look for your archetypes.
Just also to point out, Tafadzwa, all the major banks in South Africa on their website, if you just type in financial archetypes, they have got quizzes. So we've gotten to this website. We've recommended this website essentially because it's the website of a company of the person who wrote the book that we've read in this particular week. But let's just also point out that all the big banks and all the people that manage money, for example, you can go to Standard Bank website. They will have their own quiz on financial archetypes. And most of the organizations also talk about the 8 financial archetypes. They might not necessarily give the ones that Brent gives, but you will actually see that there is a broad pattern. For example, today I was looking at the Nedbank one, where they talk about the financial archetypes. They talk about the socialite instead of the pleasure seeker. But the thing about money beliefs and about the psychology of money, what we've been talking about today is about the psychology of money. There is a certain psychology of money, which is the very first thing that we must talk about before we even teach you about the habits of handling money, before we even teach you about the skills of handling money. We need to make sure that you operate with the right psychology and you understand the psychology of money. Under the psychology of money, the topics that we deal with there is, number 1, the topic of values, which deals with beliefs that you have about money, where you ask yourself, what are my limiting beliefs about money? We also talk about financial archetypes in that values discussion, but we also talk about emotions, Tafadzo. Emotions. When it comes to handling money, under the whole topic of the psychology of money, you need to divorce yourself from emotions. And there are 2 emotions that you must be careful about: the emotion of fear and the emotion of greed. So those topics come under the topic of the psychology of money. And we'll move on to other topics, but that's what we've been talking about today.
Thank you very much for the insight. And thank you everyone for joining us this afternoon. If you want to get hold of me, you can write an email to tafadzwa@thembamazibuko.co.za. You can also visit our website, www.tafadzwa.co.za.